Good morning, traders. This is Tony D from easyMarkets in Sydney, TraderTalk. If you do want to see what's happening in the markets here, we've seen some very sharp moves on Friday. Dollar yen's broken through 111. The euro dollar's testing, close to testing this 117 level. You can see that the key level to the top side here is the 2015 high, 117.10. We're at 106.80 at the moment. Now, the reason why the US dollar is so weak is that we have continued little festering of this investigation into Trump's son and Trump's business empire. Looks like they expanded the scope of the investigation into Trump's Russia connections, and this has led to concerns that his agenda is going to be delayed further, or potentially even lead to some sort of more serious issue, down the track. So just the potential for this has created the finally enough of a reason for stock markets to come under pressure. So you can see that stocks have come under pressure because gold has shot higher. Not only just because stocks did fall sharply, sharply in the DAX, but beginning to fall in normal US stocks. Now this comes at interesting timing, right? So the US dollar is quite weak. It has been weak for a long time. If you look at the US dollar index, we're hitting levels which are very much multi-year support levels. And so in terms of where we can get to from here, if you're looking at the weekly chart, if we break down below this, we're threatening to have a much more serious level of US dollar weakness. Now, if it holds though, then these sort of levels could produce a nice bounce. So the 93-ish area in coming days, if that was to hold, then it could produce a nice little stabilization and reversal. And what could the catalyst be? Well, we do have the Fed coming out on Wednesday night, okay, Australian time, Thursday morning. And what we've seen is that the markets are already priced in a lot of US dollar weakness and the fact that the Fed's not going to be moving again this year. But the Fed is not on the same outlook there. It's basically what their situation is that they still believe that inflation is transitory, and so we haven't seen them sort of come to the same conclusion that the market has come to, that the inflation is going to be low and that they can't raise rates in that environment. It's too much uncertainty. All right, so given the current settings here, it's very possible that the US dollar could come out of that meeting with a slightly more upbeat tone. She was remain hawkish to neutral as she was as early as 2 weeks ago. All right, so there's a big risk there. The other big risk in the market this week is for the Aussie dollar buyers. We've got ourselves a big week in terms of risk in the sense that the RBA governor is speaking on Wednesday. This is before the potential US dollar rebound from the Fed. And if he follows the same tune as the speakers on Friday, the RBA speakers on Friday were trying to push the story that the RBA is not the same as other countries, and that the rising Aussie dollar is complicating our rebalancing of our economy. If we get that same sort of story from the RBA governor, we take it much more seriously, and that could definitely start to weigh on the Aussie, which will also have a little bit more economic data to go on. Very important economic data, which is our inflation data. So our country here is an inflation fighting bank, and so what that means is that we have a target inflation range to hit, and so our inflation numbers come out only every 3 months, and that inflation number is coming out on Wednesday, 2 hours before the RBA governor speaks. And so we have this setup here where the market's overbought, is pulling back at the moment. There is definitely a concern that from long traders that the RBA is going to be able to try and talk it down. So you might see that play out in terms of selling ahead of that. And then if the US dollar was to have a rebound on the back of FOMC, then the potential here for a sharp reversal in the Aussie can't be underestimated. All right, the fundamental backdrop with the weak US dollar and the Chinese economic stabilization and the recovery in iron ore prices definitely suggests we should be looking to buy on dips here. But just in the short term, it's a little overdone, and if the RBA is going to jawbone it, then the timing of this is very suspect for the long. So just be careful if you're buying with the trend, that these two big events that are coming up on Wednesday can have the effect of hurting the Aussie. And if you are bullish, you might get the opportunity to buy at some better levels, like 78.50 or 77.60. All right, guys, we'll be back tomorrow. We'll update and see how the markets, how it's reacting if the US dollar selling continues. You catch us here on in the Asian morning at the Asian Open on the same YouTube channel below.